Well, our research team is standing by with CNBC-TV18's list of top 10 stocks for the day. Let's kick it off with Cipla. That's first on our radar. Vivek is here to tell us more about that. Vivek, over to you.
Well, good morning. Cipla is in focus on the back of a large anticipated block deal that could happen in today's trading session. We had access to the term sheet last evening, and according to the term sheet, we understand that the promoter group is looking to sell a little over 2.5% stake in the company via a block deal. Now, the selling shareholders are part of the promoter and promoter group. Remember, they held a little over 33% stake in the company, 33.47% to be precise, at the end of March quarter. Now, the price range of the expected deal is between 1,289.5 rupees a share to 1,357.5 rupees a share, which indicates a discount of up to 5% to yesterday's closing price. Remember, even yesterday, the stock was under pressure. So at the floor price of this particular block deal, the total amount that could exchange hands is close to 2,637 crores. Now, on the back of that, we are going with the red at this particular name on the back of the large supply that the stock could see in today's session.
All right. Vivek, thank you very much for that. Well, let's focus on the telecom space, right? And Bharti, which reported numbers yesterday, and Bharti Hexacom, both are going to be in focus. Reema has got details here. Reema, morning.
Hi, good morning. So Bharti Airtel has reported in-line numbers. Now, Bharti is a sum of parts. There's Africa, there's enterprises, India Mobile. But focusing on the pure India Mobile business, the numbers are in line. The company has reported a top-line growth of 2% ahead of estimates, though slightly lower than what Jio reported. Margins are absolutely steady at 55.1%. The big positive surprise was the increase in the number of subscribers. The company has added 6.7 million subscribers on a quarter-on-quarter basis, though the ARPU increase was a bit insipid. Consolidated numbers, though, were lower than street expectations on expected lines because the Africa business was weak and they reported numbers last week on the back of the Naira devaluation. But purely looking at the India Mobile business, these are, very steady set of numbers and fairly robust. Now, talking about Bharti Hexacom, this is the first result since the company listed in April, and the stock has, skyrocketed. Issue price was 570 and the stock is closer to 900 rupees. Steady numbers, 3.7% top line growth quarter on quarter. Year on year, it's inching towards an 8% growth. Margins have improved by 100 basis points sequentially, and profit growth too has been steady. Subscriber ads and ARPU too have improved on a sequential basis. Back to you.
Okay, thanks a lot for that. Well, Shree Cement is the other one that reported a very good set of numbers. Nigel is here to give us the lowdown. Nigel, over to you.
Well, that's right. Shree Cement's numbers were very, very good, Sonia. The EBITDA per ton increased marginally on a sequential basis. Most of its peers had reported a decline. How was this possible? Well, a couple of factors played out. For the time being, let's run you through the basic numbers. Revenue is higher, EBITDA was higher, margins were higher. Why was the top line beat? Because they sold higher volumes than expected, closer under 100,000 tons. So that's point number one. The second factor was the realization decline was only 3%. The street was bracing for a number of 5 to 6%. We'll require clarity over here because they don't give their power revenue separately, and they've not given how much over the premium product sales as well. So we'll require some details on that front. But because of higher volumes and lower contraction in realizations, we did see a top line beat. The EBITDA beat as well did come into play because it's flowing in from the top line. Operating leverage played out, and besides that, the power and fuel EBITDA per ton was down by close to around 15% on a year-on-year basis. The management has said for this coming year, they have close to around 4,500 crores of capex has lined up, which takes their capacity to around 65 million tons. Keep in mind, they're sitting on cash of more than 6,000 crores odd. So it's a good set of numbers. The only problem is we wait by for clarity on the income tax rate that took place last year. And the second factor is valuations have not been cheap for Shree Cement, and it's never been cheap. So those are the only problems. In fact, we'll chat with the management at around 9:30 a.m. So we'll get you further clarity at that point of time. So Shree Cement is a stock that reacts positively. But the other one that will be reacting well is Siemens. Vamakshi, tell us more.
Well, absolutely. The company reported a very strong set of numbers. It's a beat across the board. The positives this time around is the revenue. Revenue has seen an uptick of almost 18% YOY. It's come in nearly 4% above our own expectations. And in fact, this growth is being seen across all the segments, including smart infra, digital businesses, digital industries. Apart from that, when we look at the margins also, they've come in much higher than what we were expecting at 15.3%. And the net profit profit has also come in nearly 41% higher than what we were expecting, and this is largely being driven by volume as well as price effects as well as continued productivity measures. So a large chunk of the improvement in profitability seems sustainable as far as the company's commentary is concerned. But apart from that, the management also highlighted that the government infra spend looks quite robust, and private sector capex is just starting to pick up. So again, that's another positive, and in order to capitalize on this, a total capex of over 1,000 crores is what the company will be doing over the medium term. They've announced additional capex of 333 crores for expansion in Goa and 186 crores for setting up a train manufacturing facility in Aurangabad. Apart from that, the other announcement is with regards to the demerger. They've announced that the company will demerge its energy business into Siemens India Energy. Apart from that, the miss, however, this time around was the new orders. They were down almost 9%, and this is mainly on account of a deferment of some large orders as well as slowdown in ordering of industrial automation products due to channel destocking. But nevertheless, overall, it's a strong set of numbers. The demerger announcement as well as the capex announcement could lead to the stock opening higher today.
Right, Makshi, thank you very much for that. Stocks, of course, have done some 70% this year, right? Along with ABB, it's been a huge outperformer. Colgate reported numbers as well. Mangalam has got that set. Mangalam, morning.
Good morning. So Colgate, good set was expected. A company reported an even better set. In fact, the margins of the company have been at a near all-time high. In fact, the all-time high for Colgate in terms of the EBITDA. Revenue growth of 10% was expected. The company reported a 10% growth out there, 1490 crores on the top line. The EBITDA 532 crores versus our poll of around 515 crores. That meant the margins at 35.7% were above expectations as well. And that's flown down to the bottom line with a growth, net profit at 380 crores versus expectations of 365 crores as well. Why is it that the margins improved? Because of the price hikes that the company took and also the product mix. Gross margins improved by 240 basis points. And the margins are at a record high despite the company actually spending a little more on advertisements as well. 11.3% is what they spent as against 10.6% earlier. Commentary was fine as well. They said that rural markets continue to exhibit positive signs of consumer demand recovery. It's better than the urban for them, and that accounts for nearly 40% of their sales. Growth momentum in the fourth quarter came in on the back of strong performance in their toothpaste vertical. And more importantly, from a portfolio standpoint, they will get some more variants from their global portfolio into India, and also have launched some new variants of Palmolive, a business which is likely to grow at 2x the company's overall sales. And they're optimistic that this year would be a good one. So see some green on Colgate.
Okay, thanks a lot for that. See some green on Colgate. Apollo Tyres is the other one we're tracking. I'm going with red over there because the entire tyre space has seen very slow growth this quarter. But Apollo Tyres particularly has seen the slowest growth amongst its peers. So let's take you through the numbers. It was a miss both on revenues as well as on margins. It was the low single-digit growth that the company saw on the top line. If you can see over there, it's barely a 0.2% growth on the top line. The EBITDA is up just about 3%. The EBITDA margins are absolutely flat. And it's actually a fall in their net profits that they've seen this time, because of the EPR provisioning that a lot of these tyre companies had to make, which is the extended producer's responsibility provisioning. These are requirements imposed on the tyre industry by the government of India, and that's the reason why you've seen that fall in profits. But if you just break up the segments, right, there's barely any growth. Europe has grown just about 1.3%. The Asia Pacific and the Middle Eastern region has not even grown 1%. So there's a slowdown across the board. And if you look at the peer comparison, Apollo Tyres has seen the slowest growth compared to its peers. Its revenue growth was just about 0.2%, while peers like CEAT and MRF at least saw 4 to 8% growth. So I'm going with red on Apollo Tyres this morning. But Mangalam is back with us to talk about Patanjali Foods and Radico Khaitan. Mangalam, over to you.
Well, for Patanjali Foods, the revenues grew just around 4.5%, but it was an operational improvement where the margins came in higher by about 50 basis points. And on a business that works on wafer-thin margins, an improvement in margins is definitely a positive. Edible oil volumes actually increased by 5%. The prices have been lower, which is what reflects in their revenues. But the revenue growth this time around was led by a record performance in their food and FMCG business, which increased by 49%. The key trigger for them, however, is that the board has formed a committee to peruse the proposal of acquisition of Patanjali Ayurved's non-food business, which includes their personal care business. So were that to happen, that would provide a fillip to their revenue growth, and as a result of which, this would be a big positive too. On Radico Khaitan as well, I'm going with green because the revenues have grown 30%, EBITDA has grown 55%, and net profit around 26.5%. While their overall volumes have declined by 1.2%, the prestige and above volumes have actually increased by 14%, and that accounts for about 503 crores in their overall revenue. They've given outlook for the next year as well, double-digit growth in their premium vertical in FY25. While they're monitoring the prices of raw materials, they will maintain ad and sales promotion spends at between 6 to 8% of their sales. Strong performance from the premium end of Radico Khaitan, hence I see green on both.
Okay, all right, Mangalam, thanks for that. Well, let's go across to Sonal. She's here to tell us about Oberoi Realty. Sonal?
Good morning, Nigel. Well, let me start with the P&L first because they've been able to recognize a lot of projects in this quarter because of higher sales. Revenues were up 37%, EBITDA went up by 7%, margins came in at 45%. They were lower on a YOY basis, but profits went up by 64% to come in at 788 crore rupees. Their total operational performance was higher on a quarter-on-quarter basis, and it was led by newer launches that the company made. Their total units booked, the booking value and collections as well, all of them were up on a quarter-on-quarter basis, and that was a substantial increase as well, led by the newer projects that the company launched. The board members, additionally, they have passed an enabling resolution to raise funds via QIP up to 2,000 crore rupees. So going by the numbers, it's a positive. Expect a green tick on the stock today. Okay, expect a green tick on the stock. That is an Oberoi Realty. Thanks, Sonal, for that. Here's a quick recap of our top stocks in focus. Stocks with positive news flow. There's Bharti Airtel, Bharti Hexacom, Shree Cement, Siemens, Colgate, Patanjali Foods, Radico Khaitan and Oberoi Realty, while stocks with negative news flow, there's Cipla and Apollo Tyres. But let's quickly take it across to Manisha Gupta. She'll give us a roundup of all the action from the commodity markets overnight. Manisha, good morning.
Morning, Sonia. Thank you. I want to first focus on crude prices, which are holding firm. And today is the third straight day of gains coming in here. There are signs of strong demand from China. There are supply disruptions due to wildfires in West Canada. Also, decline in U.S. inventories, not just in case of crude, but gasoline and distillates tells you that the physical demand on ground seems to be picking up, especially ahead of the summer demand season. Also, OPEC monthly report yesterday suggests that they are keeping on with their expectations of world demand for this year and the next as well on the positive side. So that led to some buying here. But the good buying clearly is seen in case of metal prices. And here, while the LME copper is trading at a 2-year high, it's a record high in sense of copper in New York, in Shanghai, and in the Indian markets as well in sense of prices. Well, the trends are bullish, especially the long term. There are tight supply concerns in the market right now. We have seen copper inventories globally continue to decline, and China imports have been rising. So it's a complete recipe for the copper bulls to continue strong here.
All right, Manisha, thank you very much for that. So, yeah, I mean, yesterday was a big day for metal stocks here in India, right? I mean, Nalco, Vedanta, so many of these stocks, steel stocks, of course, there are individual results-related reactions as well, but I think there's a broader sector tailwind which is at play here. We'll talk more about metals and other sectors. We'll take a break here. Deven Choksi, Managing Director at DR Choksi FinServ, will be joining in on the other side. Stay tuned.